Good afternoon, traders. This is Christian from Market Trade Group, and this is your end of day recap for April 4th. Themes of the day I will get to in just a second. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. The full risk disclaimer is right here. So, a couple things for the day. Week, I would say, a combination today. Breadth, which opened up pretty poor right around the open today, just kind of gave us a bit of a signal or feeling of what kind of day that we were going to get today. With you can see on the bottom left of your screen our market breadth indicator. What that basically does is look at up volume versus down volume. So rather than just plain advancing versus declining, it puts a little bit more significance behind it to me, and that's why we've created this type of indicator when you associate volume behind it. So when you've got a pretty negative reading like this, you kind of know that that could be how the rest of the day goes. Now, we did get some economics that I think was also a catalyst for the day. I will bring up that. And this is kind of interesting, and I think really what kind of puts this together in terms of the picture is what we got yesterday, which I did not do a public video yesterday, but when you kind of look at how the way that these economics have been going this week, and again, this is just I was calling it earlier on our member midday video, was that like this batch of economics that we've gotten recently has come out decently weaker than expected. So remember, on Friday we had the PCE deflator number, which came in right on the screws in terms of expectations, 0.3 versus 0.3. Again, that was the PCE deflator, or a gauge of inflation. But yesterday we got the ISM manufacturing, and remember that the manufacturing, for me, again, I'm giving you my opinions in this video, but the ISM is one of the ones that I generally look at because it's a leading indicator. Things like GDP, for example, right? That tells you what happened in the past, right? I mean, that's fun for talking about, I guess, at cocktail parties, but like a GDP is not going to tell you anything really about like what's going on in the future. So ISM is a little bit more forward-looking. Stock prices are more forward-looking too. So ISM manufacturing, anything above 50 is expansionary. Anything below 50 is contraction, and it's kind of just indicating that we've got some contraction going on, and this was lighter than expected. This was yesterday's data, by the way. But when you get today's numbers, factory orders, durable goods, those both came in light. The durable goods was in line with expectations, but the factory orders was less than expected, 0.7 versus 0.5. So this is really showing some weakness. We really haven't seen too much of this. When we have seen it, it's been short. Like, I think we saw a little bit of weakness towards the end of 2022, but then like the very next month, things were positive again. So it's going to be one of those things to kind of wait and see. Don't forget, tomorrow we'll get the ISM services number. That again is has been coming in much higher. I mean, they're expecting another pretty big reading again, so that could potentially flip things if this number comes in around around that 54 number again, which is expansionary. But this together with the JOLTS jobs opening, it came in, so I guess there's less job openings, and I think it's kind of interesting when you open this up and you look at the blue line is what the actual number is versus what the survey number is. But you can see like this is the lowest that this has been basically since the beginning of 2021. I mean, this was a really soft reading. So it kind of brings us to, okay, well, what's the impact of this? And if you go across sectors, there was definitely felt like there was some unwinding of some of those more cyclical areas of the market. So for example, things that anything manufacturing that had to do with, let's say, manufacturing, right? Industrials had a big down day, and some of these names really got hit hard, right? Caterpillar was down 5.4% for the day. So, you look at the S&P today, which was just down 0.5%, but, again, there's a lot of other areas that got beaten up, a lot harder than that. Look at United Rentals, right? This is a name that had a really good earnings report and guidance, and went all the way up to 481. The stock's down to 359. Had this little bit of a sneak back up to the 20-day moving average, and then kind of a collapse. And I think we're seeing that, and not just one group, right? And I think if we go over to, for example, when we look at the small caps, right, it's kind of the similar type thing here, right? A move a little bit above the 20-day moving average. We got to the top of value, right? So the market webs indicator telling us where there was resistance. I tweeted this out this morning, and today we're at a really interesting level. And I said, this is going to be kind of a tell what we do here at the top of value. Either we're going to continue to break and recover as small caps have been weak, or we're going to push back. And, there's no doubt about it. We got to bounce here. But, this is always the concern because IWM is in a downtrend, right? I always talk about this because I'm mainly a trend trader. I stick to things that are in uptrends. And I always try to bring this thought into traders, investors' heads when, they like to go, for the most part, a lot of investors like to buy things that they think are cheap, and that could mean that a name's in a downtrend or an area's in a downtrend. And I always ask traders, investors, when they're doing that, like if you're buying a name that's gone down a lot because you think it's a good value, what do you think is going to happen with this? I always try to put the question in people's heads, well, where are you going to sell it? If you're buying the dip and it's had this big of a move to the downside, what's your exit plan? Are you just looking for a bounce, for an oversold bounce, or are you looking for something else? Because once a name falls into a downtrend, it often stays in a downtrend for a little bit, which kind of brings me to the next. So we'll talk about. I'm going to go through and talk about a couple problem areas of the market, and then we will talk about some of the positive things too, because it wasn't all negative today. But I mean, this is concerning to me that the banks just cannot get going. They're basically, even though we haven't heard, and I've heard this reason, which I'm not sure I agree with over the last couple of weeks, like when the market has rallied, oh, we didn't hear anything bad about a bank. Well, just because we haven't heard about another bank going under, this group does not look healthy, and it hasn't rallied at all. So same type of principle. Like if you're buying this for a bounce, where are you going to sell it? Because odds are it's going to take a long time. I would think. Listen, I don't have a crystal ball, but I would think for this to come all the way back up here, it's not going to be like a U-turn. It's probably going to take a long time. People are aware of risks, and they're worried. I think about this group. So where they weren't a few months ago. So 41.48 is going to be a big level to watch. Also, when you look at the micro caps, right, and especially when you start to this was a chart that a Tribeca Trade Group member brought to my attention. But you go back and forth. Like if you listen to financial media, whatever it is, they talk about whether or not we're in a bull market or bear market. And the market is made up of stocks, and there are some stocks that do not look good. We just talked about what happened to the industrials, what happened, what the banks are looking like, and the micro caps, your smallest companies. And when you look at the composition of this index, biotech is the biggest group in this index, then followed by banks and pharma companies. And it's, I think biotech's about 15% of this index, but you can take a look here. I mean, that's not a good look. We're teetering on the lows of, going all the way back to last year. So I bring this question up when people want to characterize the whole market as being in a bull market or bear market. There's a lot of stocks I think that are in bear markets, and there's a lot of stocks stocks that are in bull markets, which kind of brings me to the next topic. I talk about this on Twitter just because whatever I used to be an ETF trader, and I know an awful lot about indices. I spent a lot of time on a Delta One trading institutional trading desk, so I really know that, like, the nuts and bolts of how indexes work. And there's this nonsense that keeps being going around. I'm sorry, it's not nonsense, because it is true when you explain how an index works, but you don't want to use that to supply the narrative that you're looking to fill, right? So the narrative that I keep hearing is that, hey, there's only 4 or 5 names that are responsible for the S&P's gains this year. Now, again, when you look at the weighting of an index, right, there's a couple things to think about, right? How is the index weighted? If it's market cap weighted, right, yes, the bigger names are always going to be responsible for what the majority of the moves are, especially when you have, if you've got 3 or 4 names that are over 10%, 15% of the index, they're going to be responsible of a good portion of of the index's gains or losses. Why? Because it's just math. If you put a top heavy index, right, like another one, for example, right, that's, I could talk about this all day long, but I'll keep it brief. But if you look at XLY, right, for instance, right, and the constituents in XLY, it's interesting because we saw calls go up in this ETF on Friday. We saw more of them today, but I'm not sure if that's closing. But you look at Amazon and Tesla, right? Here's the weight for these things too. You add the component. So Amazon's 22 and Tesla's 15%, 37. So you can make the gain. You can make the comment every single day. Oh, geez, there's only 2 names in this index that are going to be responsible for all of the gains or losses. You could make that statement every day, because that's exactly how this index, this particular ETF, is going to function. You've got 2 companies that make up 37% of the index. So yes, it's a pretty good straight up bet that those 2 names are going to make up a good portion of what the XLY ETF does. It's just math. It's just how it's situated. Now, if you don't like that, right? Because so the generalization that I have a problem with is that doesn't, just because those 2 names are driving the index, right? So let's say, for example, that Tesla and Amazon are up big year to date, right? Yes, they're going to be driving the performance of the ETF, but that doesn't mean that the rest of the ETF is weak, right? It just means that the rest of the names are underrepresented in the index, right? Because of the market cap functioning of this. Now, if you don't like that, what you do is you look at an equally weighted ETF that takes the bias out of it. So you could look at things like RSP, right? And I'm not going to go over the technicals in those, but you could look at the equally weighted Qs too, right? It takes the bias out, but please don't try to put a bullish or bearish narrative because of how an index is weighted. That's how it is. That's always how it's going to be. The bigger names, and the bigger they are in the index, they are going to have the biggest impact. So I'll move on for that, but I like to insert these little things because there's so much bad information that you get from watching financial media. Because what happens is someone who's bearish will try to trick people in thinking, oh my God, there's only 2 names that are responsible for the index's performance. Well, of course, that's always going to be the case when you have something as skewed as this, or skewed as what we currently have. That's the same situation every single day. But it doesn't mean that there's bad breath in the market. All right. So again, I'll move on from that. Regardless, there's some things like this that do not look particularly good. Now, I mentioned I would kind of take this one step forward with how the economics are coming out. So Of course, this is also an implication. The odds now of a rate hike coming in May have dropped down to 47% right now. So they were just about 58%. And again, this is going to fluctuate. There's nothing, this is going to continue to move with what the market does, as well as what economics say, as well as what these Fed speakers say. So there will be certain areas of the market that will outperform with no more rate hikes, right? And with bonds doing what they're doing. Speaking of bonds, if we want to look at the TLT, the TLT has got it also a very interesting level to watch, right? Watch this 107.72. Right now, we are trading inside the value area for the month. If we begin to break higher, we're now in price discovery. Right now, we're just trading in a range here in bonds, and there hasn't been much volatility, which is a good thing too, right? Because sometimes that can really dictate some, movement in equities as well. But the volatility is really coming in bonds right now. Watch for a move above 107.72, and this may be a nice trade. Speaking of which, so let's go back. I kind of got off track there a little bit, so thanks for hanging in there with me. But so we went over today, weak breadth, weak economics. Also coming into today, we were overbought, right? You could look at things like the McClellan oscillator, right? That was overbought coming into today. So perhaps that may have burned off some of those overbought levels. So that's not necessarily a bad thing. We talked about some areas that look vulnerable, the microcaps, right? The banks, the small caps, the industrials right now. Also the metals and mining group does not look particularly good. This is another group that stalled out here today. So again, to me, when I look at this chart, it says sideways for now. All right. And steel names also, an economic sensitive group. They got hit hard today, down 4%. Okay, so again, some areas really did not look particularly good. What did really well today? We'll start with gold. I think this is really interesting. I had made reference that this was 2 weeks ago. I think that we've got up here and we took out a virgin point of control. Again, what is a virgin point of control? It's an area where a lot of buyers and sellers previously met up, and we have not revisited, hence the red line. And it acts as overhead supply. So once we got here, we've been digesting for 2 weeks, and we had some nice buying power to get us over this. So it's kind of game on now, I think, for gold stocks, because we pushed out of this. You could say that this is now like a bull pennant, right? So that's higher. That's the highest point that we've been. And very interesting. So I put on Newmont yesterday. This was a stock that I was watching for a while. It kept on butting up against the March top of value, but just didn't have the oomph to break higher. It did that today. I'm ultimately for now targeting 5250, which is a little bit further up, but a lot of call buying, good volume in this one. And also, one of the things that we've been talking about in the trading room, specifically yesterday, we saw a big order of GDX calls, also GDXJ calls. These things had a nice day today, right? Looking at the weekly chart, just to see if there's any resistance here. We're going to be coming upon this 3447 resistance, so I would keep an eye on that. GDXJ also at some resistance, but we'll see if this can push through. That would be 4137. We did close above there, but the week's not over. Again, they kind of look like similar charts, but a lot of strength, obviously, in gold charts. So when you have weak economics, gold can go ahead and outperform like it did today. What were some of the other areas? I got this question today because we were going over this in our midday video, and what are some areas that do well when you have the contraction that we saw in the economics? Well, I mean, you can make a case for healthcare stocks, right? And if you look at the medical devices, which have been doing quite nicely, right? Of course, you could look at names like TMO or LNTH or ISRG, but I would watch this. I've got a major trend line drawn here, which again, trend lines are all subjective. But I think it's kind of interesting. We are trading above the value area. If you look at the weekly chart here of the medical device ETF, this could, if it wants to, it could rally up to about 57.60, right? And I think it's not a bad place to kind of be. We've talked about for a while, like how bad the healthcare stocks have been doing, right? They've perked up, even though I think this is a very sideways looking chart. They've made a nice move at this point from the lows, gets you back in here. So I would rather look at that for now, the medical device ETF, than I think overall healthcare stocks. Another area that does do particularly well and does do well in deflation environments is what's going on with the tech stocks, right? And we know that that's been one of the leaders of the market. So for now, we're consolidating. We did get over this virgin point of control, and it might be consolidation time a little bit, right? It doesn't mean every stock is going to consolidate, but I think for now, the overall index looks like it's could be pausing. It did kind of push back here into the top of value. So this is a good place, just letting Thinkorswim kind of catch up a little bit and adjust. But I would watch this 316.70. As long as we stay above this level for the week, right? Maybe dips continue to get bought. Also, you could look at the 5-day moving average, which is down here, which is here, and you might see this group continue to outperform. Because it's just different than in the industrials or steel names, right? It might do a little bit better, right? I mentioned that word deflation. I don't know. We're going to see. We'll get Friday's jobs report, but I think things are. I'm not. Again, I got to be careful with this because I don't want to say that we're going to start to see deflation, but I would just be open to that possibility. If the economics continues to come in lighter than expected, we'll see what the jobs number and more importantly, like people get. By the way, this will be Friday when the market is closed, which is interesting to see us get a jobs number. But again, like people will be interested in this non-farm payrolls number. This is the number that's really going to be important when you talk about the Fed, the average hourly earnings month over month. Why is that important? Because it's another gauge of inflation, whether or not the wages are increasing or going down. So of course, all the media outlets will be reporting about how many jobs were created, private and non-farm. But really, if you're, I don't want to say smart, but if you can kind of read between the lines, I think the average hourly earnings will be the most important data point because again, the Fed is really closely watching that, right? And that may dictate whether or not we see any more rate hikes this year. All right, guys. I mentioned some other areas that I was going to look at on the positive side. One area, two names that saw some call activity today. Alibaba. Remember that this was on fire, made a really nice move up. Well, now you got a little bit of a dip back. It's kind of settling in here. This was up 2.3% for the day. There's going to be some resistance at 104. Also note last week, it took out this virgin point of control. This is the problem. This is a little bit of problem with this stock is it's got a lot of overhead supply. So the next level, if it can get through 102 would be 105 to the upside. So you've got a little bit of digestion after this, and it could end up inside value for the week too. But, if that does that, maybe it will set up for a charge up to that 105, maybe next week. We'll keep an eye on that. I am long this name. I got long this afternoon or like midday today. Other names too that I'm watching. Palo Alto is an interesting name. It's had 2 inside days, right? So again, just looking at some growth stocks, right, that I think got a little bit ahead of themselves on Friday. So watching to see how these things, some of them come in and take a little bit of a breather. Roku, which we had a webinar last night. We went over this chart in detail. It wasn't ready to really go today. It took out one of these 5-minute virgin point of controls today, like right off the bat, which is always dangerous. So I try to trade in this. I took it off. I lost money on the day trade because I was looking for something more than like $1. So I wanted to start a swing trade, but it just kind of it just backed up too much on me. But I re-added a small trade. But you could see, it took out this level here and faded. So that might set now that level's gone. I would be patient with it, right? And, maybe if this thing can get going, the first upside level that I see to watch out for, or to take targets would be at $70. All right. So that's one that I'm definitely watching for tomorrow. A couple other names that were of interest, an IONQ. I don't need to go over the chart, so I think I'll leave it here for today's video. My overall market message, which I tend to sometimes wait till the very end of the video to do that, is be patient with this market, right? One thing that I didn't like, and I communicated this to members in our weekend video, is just people really got bulled up over the weekend. Yes, there's a lot of good to take away from last week, but it was also quarter end, and there's a lot of weird things that go on with quarter end. My comment is always, in this situation, is don't get over the tips of your skis with, getting all bullish. I just don't think that that's the year that we're given, unless things change. But I'll bring up just the S&P chart, which, by the way, we did come very close to taking out some upside levels that are targets. So, but overall, and I know people argue with whether or not the S&P is the overall market. I don't really want to do that in this video, but the majority of the indices are sideways. So we're still in this range. It's where we opened up the year. It's where we are now. It won't change unless we get above 42.57 or below 36.51. So I don't think it's smart to get uber bearish or uber bullish until things really kind of the picture changes a bit. So I'll leave it there. Again, doesn't mean that there's not going to be good trading opportunities, but I think you just have to be strategic and smart in this environment. Have a great night, everybody. Hope to see you in the trading room tomorrow morning.